All right. Good morning, everybody. Welcome back to a new episode of Derek Invests. I'm your host, Derek Miller, your host with the most. So, what are we going to talk about today? Well, we have to come up with new things to talk about. And we talked a lot about the fact that the 20-year treasury is there's a massive amount of trading activity down there after prices have fallen roughly 50% in that ETF TLT. And that should signify to us that interest rates are, in fact, going to drop because rates and those treasuries are inversely correlated, right? So they're inversely related. So as rates drop, prices go up. Therefore, if there's a lot of trading activity at a low price, they're expecting price to rise, which therefore means they're expecting rates to drop. That would also be a very good reason why gold has come off of its high. I think people jumped too soon. They thought hyperinflation was on the way, like it was in the early 80s, late 70s. And it does not look like that's going to happen. So gold should probably take a bath. It's also a good reason that oil got pulled down. But we do have some demand going on with oil. And to me, it does look, in fact, strong. But that's for another conversation. Today, what we want to talk about is REITs. And why do we want to talk about REITs? Because what is so attractive about REITs right now is their yield. Okay. So people are buying REITs because they want the yield. But what happens when interest rates begin to drop? What happens to their yield? So you always want to make sure that when you're going into any asset class or any investment, you're not just buying it with this narrow focus. I want a dividend. I want yield. I want income. There's a broad picture out there that you need to pay attention to. So if interest rates are going to drop, what you want to focus on as well as yield is, do we believe that real estate is going to do well? Well, commercial real estate definitely has some major headwinds, right? There's still massive amounts of office vacancies. Why? People are working remotely, and while no one's talking about it, the fact of the matter is these companies have laid massive numbers of people off. So there's not as many workers in the workforce as they're pretending. Ask Airbnb how many people that they laid off and then had AI replace those jobs. By the way, AI destroying Airbnb. I know I talk about it so frequently, you probably hate hearing it, but I have to tell you, that company is doomed using AI as customer service. They right now owe me over $3,500, and it has been 6 weeks now. They cannot figure out how to get me my money that they owe me because I am not talking to people. It's absolutely insane. Anyway, that's a big problem for commercial real estate. When you have a large supply and diminished demand, that is a big problem for commercial real estate, and that's a big problem for REITs. With rates as high as they are, that presented a problem in buying new properties, right, and maybe remodeling or revamping a property, but it didn't really have anything to do with occupancy. High rates have nothing to do with occupancy. They have an occupancy issue there. So if you're looking at rates, what we want to do is we want to evaluate the REIT itself. If you're looking at interest rates, you're looking at yields, so you're looking at REITs and you're looking at real estate, which I happen to be a believer in real estate at the moment because I think that we are going to have, who knows, it could be a decade long of interest rate spikes and drops, spikes and drops. It's going to feel smoother, but it's going to take longer to clean this mess up. We've increased the amount of currency in circulation by 50% in 2021. We have to rein some of that back in. So this is going to happen. So let's start looking at some of these REITs. What are some of the REITs that we're going to look at? We are going to look at Realty Income. That is symbol O. It has a yield of almost 5%, 4.8%. Prologis, PLD, yield of 2.6. Public Storage, PSA, yield of 4.1. Simon Property Group, SPG, yield of 6.2%. Equinix, EQIX, a yield of 2.1%. Digital Realty Trust, DLR, 4.5%. AvalonBay Communities, AVB, that's 3.5%. Equity Residential, EQR, 3.4%. Welltower, WELL, yield of 3.8%. American Tower Corporation's AMT, 3.3%. So we saw some in there that are in the 4% range as far as yield goes, which is really attractive almost to anyone when it comes to yield. So let's start taking a look at some of these prices. Let's see what the investment itself looks like as far as incoming funds. Let's jump over. I'm gonna share my screen with you here, and I'm actually gonna get rid of this. I notice on the last show, it does block a bit of what you see. So I don't want that. I don't want that to happen. Where are we here? Let's go up. Here we go. Let's go ahead and hide that. Before I share, I want you to be able to see everything that I see. Here we go. All right. All right, I'm going to switch positions here and we're going to get started. Sun's starting to come up on this beautiful morning. While I love it, it's also a bit blinding. So let's scooch over. Forex.com. Will the FX carry trade see a revival? Are dynamic interest rate spreads set to revive the carry trade? Trade with Forex.com today. Bada bing, bada boom. Based on U.S. client assets for 2021 monthly retail Forex obligation reports published by the CFTC, FX trading involves significant risk of loss. Thank you, Forex.com. As you can see, we are on Trading View today. We're going to be on Ninja Trader tomorrow. I'm going to do some future stuff tomorrow if anybody's excited about that. So the first company, the first REIT we're going to look at is O. All right, so let us take a look. This is the Realty Income Corporation, guys. I'm sorry. I am just scooching over here so I know where I'm at. All right. So let's take a look. We're going to go out long on this thing, right? We always start with monthly. And what do we see, guys? What do we see? That's a monster right there. What's that? That is a high of 60. What was the low here? The low 45. That's pretty darn impressive after a 35% rise to see that level of trading activity. But look what we got here, everybody. This is 2020, by the way. This is pretty impressive. Let's zoom in a little bit. Oh, baby. I'm telling you now, you like that. You look back here, you know what this did. Okay, this is up there at 72.50. And I'll tell you, it obviously was selling. So to drop down to 45 and then see this, yeah, we like that. Let's zoom into the daily. For those of you that don't follow along all that often, or maybe this is your first time showing up, what we're looking at, what I'm saying, ooh, baby, about what seems so exciting is this right here. This. This is volume, okay? And what does volume signify? Trading activity. What does trading activity signify? Trading activity either signifies buying or selling by institutional money, especially when it's at that level of trading activity. Why do I say that? Because there's only one group of people that can leave a footprint that big, and it is not someone trading at Robinhood or Schwab. That is institutional money. And what we want to know is, what does institutional money think about the current climate? What do they think about the current position? And right here, as you can see, there is a ton of purchasing that took place right here at the absolute lows. What do you know? It's amazing how that happens, isn't it? That is right down there at the low of 45.04. All right. And now we see it again here. I just want to be as accurate with this, guys, as possible. It's playing with me. Okay, low 55. I mean, 2%. Significant volume here as well, where we're sitting at 3. What do you think that is, everybody? Well, if that were me and I were a betting man, and this isn't about betting, this is about probabilities, I would say that's purchasing. We are now looking at a daily chart. So let's go ahead and zoom into a 4-hour chart. You always want to zoom in and change time frames, everybody. You want to change time frames. You want to remember what you just watched, what you just saw on the previous chart, but remember that every chart is a new chart and a new evaluation. Here we are down here at those lows. That's that big volume. Here's where that big volume stepped in which we just saw in the last chart on the weekly. What a weekly chart does, or what a daily chart does, as you step it down, is you're zooming in on time frame. Okay, so while this volume here on a daily chart looked much bigger than this chart back here, as you can see, this took place all in one 4-hour time period. That daily bar we just saw that was enormous took place over a few days. That's actually a good signal. As is this over here. So let's just keep zooming in. Let's get to a 1-hour chart. We're still looking good. It still looks like buying. Now, this does change the image a little bit in the short term, and I'll tell you why. Because if you're looking at this trading activity here on this chart, and every chart is a new chart, guys, you've got to remember that. I get so many questions on how can it switch. Well, how it switches is as the time frame is compressed. Right? As the time frame is compressed, that tells you what's going to happen more in the near term. And that's why we're zooming in. It's what we want to know. So let's take a look here. Boop, boop. That's probably your average volume. So this here, actually on a 1-hour chart, it's really, it starts here, which is darn close to where we are now, but then it rolls into the highs. And the biggest bar on this is at the highs. Okay, so that's definitively selling. Now, we can confirm that this was all selling. How? Look what happened to price. Boom. Now, was there massive buying down here? No. Does this appear to be buying? It does, but the volume doesn't appear to step in very, it's not in dramatic fashion. This looks good, and I would say that is buying. We are on these lows. Okay, when I say buying, folks, what I'm looking at is the trading activity, the volume, and where it's taking place. If the volume was taking place up here at the high prices, and up here at this high price, and up here at this high price, that might concern me a little bit on this chart, because that would traditionally be distribution. It looks to me on a 30-minute chart that this is a bunch of volume here. That's a lot of trading activity, right? I would say our average trading activity on this chart is probably about there. So I like this. It's okay. It's not knocking my socks off, but it's still looking good. Let's zoom into 15 minutes. What do we see here? Volume bubble, gap fills. We like that. Volume to the upside. Let's look at a 5-minute. Remember, guys, it's summertime, right? It is summertime, and trading is it's minimalized at best. Forex.com, everybody. Discover your trading strengths and weaknesses. Get exclusive insight into your trading patterns with the latest behavioral science technology at Forex.com. Forex trading involves significant risk and loss, and it's not suitable for all investors. Thank you, Forex. I figured since I'm using this, I'll give a shout out to somebody that pops up. They are paying for the advertising here. Okay, so let's see. Not with me, I mean with TradingView. I am not associated with Forex.com. I'm just reading that because A, I think it's fun, and B, I don't mind doing it. Okay, let's take a look. 15 minutes. Yeah. So normally a 5-minute chart, guys, I would say it's, if it's fall, I'm like, okay, it's a 5-minute chart. We're probably looking at, 2 to 3 days. I've realized here, and I've realized over the years, and then sort of just kind of forgotten it, because 2 to 3 day increments don't interest me. I'm either going tick by tick in futures, or I'm going long term, because that is the way I like to trade. Everybody has a different way. Trade, invest. That's how I make my living. I like that because I think that's the optimal strategy for taxes, time, and trading efficiency. And if you don't know why that's far more effective for taxes, time, or trading efficiency, reach out. I'll let you know. Okay, so if I were looking at this and I were saying what's going to happen in the next week, because we're looking at a 5-minute chart, guys, what's going to happen in the next week, I would say, otherwise, remember, if this was fall, I would say it's going to happen within 2 days. I would say you're probably looking at, you're looking right there. You're looking at 53.43. But there's nothing here to write home about, so I'm not going to take the time to take a picture of this. But if you're looking at you're looking at 53.43 without a doubt, I would say, this week. Let let's go ahead. Actually, you know what? We might as well throw it up, shouldn't we? We should throw it up. So let's go ahead and put up O at I'll do 53.40. There's no big difference to me. We are in a yellow submarine. No, we are online and we are looking at REITs right now. So let's continue that. We're going to go to blue. Something tells me that these REITs are going to end up looking pretty good. And I'll tell you why I say that. Oh, shoot. I'll tell you why I say that. Because I think a lot of people are starting to really look at this stuff. Is it the 22nd or 23rd? It's 23rd. Okay, I'll tell you why I think it is, because I think yield is very attractive. I think that that rates are. I think rates obviously inevitably are about to fall. I've gone through this on several broadcasts. Let's do target date. I'm wearing this stupid Band-Aid. It really messes up my typing. Let's do 628. I don't even know that the target date matters that much for this REIT. I would hope that you would know why you would be buying this in your taxable account and why you would be buying this for more of a long-term strategy. But if you don't, please reach out. I teach people this stuff. Everybody's completely different, regardless of what your financial advisor tells you. You don't fit into aggressive growth and income and growth, or conservative. You don't. Nobody does. And if you're treating your money that way, you should just see my video on the difference in investing $2,000 at 19 years old and making 10%, and investing $2,000 at 19 years old and making 20% at age 65. I'll give you a clue. If you average 20%, which is about 10% more than the index does, and if you think that's impossible, you've been brainwashed. That's far from impossible. You end up with about $14.5 million by the time you're 65. However, if it's 10%, it's 3.5 million. It's still not bad. Then why don't advisors have a bunch of clients with $3.5 million? Well, I'll tell you why. Because when you get scared, they're scared too, and they're going to tell you to hit the eject button every time. They're going to tell you to stay, but then you're going to say, I'm scared. They're going to say, well, if you're scared, you have to do what makes you feel best. They're going to give you a lot of excuses, when the truth is selling at that time is the biggest mistake that you'll ever make. But they won't prevent you from doing that, because they're not even sure if you should or shouldn't do it. That's not a knock on advisors. They are paid to bring in assets under management and charge a fee. I am paid to make money and teach people how to actually make money in markets. Big difference. They're like the public sector, I guess, and I am like the private sector. I am judged based on results. They are judged based on they work for a giant company with a bunch of money that they bring fees in for. Guys, this looks good on a daily so far. We're looking at Prologis. Let's zoom in a little more. Yeah, I like this volume bubble. This looks really good, guys. This one looks better than the last, for sure. This definitely looks better than the last one. Look at all that trading activity. I like that. Okay, let's zoom into 1 hour. 1 hour doesn't look as good. Because we're zooming in on all that volume, right? So it's not as standoutish. And remember, what we want to see is what's going on in the short term. We're looking for the next week here. Okay. I can give much longer time frames on what's going to happen. And in many ways, I find that to be far more interesting. But most people want to see what's going on now. Now, on a 5-minute chart, is this good or bad? Well, I would say that after a drop like this, and then having this kind of volume step in, this level of trading activity step in, I would like that. I would. Is there a ton of upside here? Probably not. You're probably looking at right there. You're looking at 110.44. You're looking at 1% this week, I guess. That's what I would say. Do I like this in the long term? In fact, I'll tell you what I'm going to do. I'll go down to a 4 hour. This will give you like a 4-month outlook on a like. Look, I like this. I'm gonna do this one a little longer simply because first off, you should be buying these things for a little bit longer than you shouldn't be in here trading REITs on a weekly basis anyway. Not in this market, it makes no sense. I'm gonna go ahead and say you're looking at right there. So look, there's 15% upside in this thing on top of its yield. What's the yield on Prologis? 2.6. So yeah, let's go ahead and say PLD. Let's go 124. 124. This will be oh, 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 oh. This will be a target date of 12/1/2024. And we are doing this on 6/23/2024. Beautiful. Target date 12/1. Okay. So you have, let me go back over here. Let's do that. You have 15% upside with what did I say, 2.6? 2.6% yield. All right. Looking good. We're going to keep this one, guys. We're going to keep this one. All right, now we're going to start moving a little bit because I don't like this stuff to drag out. I think people get really bored. So PSA, public storage, just take a look. A lot of repos going on in this world right now. All these storage people coming out of the box again. Okay, this one doesn't look as good. That's a monthly. That's a weekly. Let's see, anything so far? No. Daily. No. 4 hours. See, this is selling for sure. Says all this. Buying down here though. Let's go into 1 hour. Oof. Okay, yeah, this is quite a bit of volume up here at this high price, and there's also some volume back here at this high price. Let's go to 30-minute. Oh gosh. Yeah, I mean that's a lot of volume up there at this price right now. This might be. Yeah, you know what? I'm not going to comment on this one. It's tough to say. There's nothing here that pokes out. Nothing here that. Oh gosh. No, I mean it's the price here is down certainly in the next week. I would say to right here. But there's nothing really to write home about. We're just going to move on. The price there is definitely down, probably a couple percent this week. SPG. This is definitely an up because prices are dropping from here. I'm just going to back out a little bit, guys, since we're only looking out a week or two. 30. What you don't want to do is trade stuff that there's really, very little interest in. So even though I don't encourage you to do this, I've been doing this a long time. If I want to, move in reverse, I usually can because I know what I'm looking for. Yeah, there's nothing here. I mean, honestly, this does not look good. This looks the opposite of everything else. I would say this is to the downside. Let's go back to that 5-minute. Oh, gosh. Maybe you get a little pop, but this is not something you want to be looking at. What is this? Simon Property Group. Yeah. Yeah. This thing's in sell mode. You can probably get a little bump this week simply because it's fallen so far so quickly. I mean, you've gone from 155 to 145 in the last 10 trading days. It was gapped up in price, which is probably to sell it off. Simon Property Group, not good. Yeah, it's just not good. This is not good. If I condense this a little bit, well, yeah, it's, oh gosh. Yeah, I would stay away from this one. I wouldn't touch that. EQIX, EQ. Let's try to find something that we really like. Let's try to find something with some upside. We have 5 to go here. This, where we at now? Sitting there, there. This one looks all right. Okay, that's a gap up though. I don't like that. You don't want to see giant gaps like this. You just don't. And then when you see giant volume like that and price does not go up, it creates a range. This is not a positive sign. There's nothing here extremely ugly either, everybody. I mean, there's nothing here that it scares me, but there's just nothing here exciting either. Yield this Equinix. No. They're the one that's 2.1%. We're going to look at Digital Realty Trust next. DLO. This one at 0.5, which sort of seems like it's. I think it's the highest yield we're looking at. So I'm always curious about that. You know what, guys? We're just going to stay away from this. This is just not worth looking at. I feel bad saying that. I try to evaluate everybody, and I try to give price targets for everybody, but there's just no reason to give a price target on that. I'm just being honest. It doesn't look like there's going to be a reason to give a price target on this one either. Yeah, this is to the downside. If there's a price target here, it's to the downside. Yeah, some of these are going to get dinged. I can see it. That's on the low. That's on the low. Let's go into a 1 hour. Gap fills. Oh, gosh. Price rises. Now there's lack of demand. In the near term, though, you have to realize that you can say, hey, something's going to get dinged. Something's going to get hurt. But then you look at it in the near term and you just go, look, there's not a lot here. And like that's the case here as well. There's just not a lot here. I don't want to tell you to chase something or ignore something that there's not a lot to. I mean, the reality is this thing looks like it's going to pop to 149, maybe 25, which that gives you a 75 bip run this week. But it's ugly. I mean, this is not something you'd ever hold. I wouldn't. AVB. I'm trying to get through these for everybody. AvalonBay. Ooh, a lot of buying back there. Is there a lot of selling? No. Let's take a look here. Weekly. Whew. Actually looks kind of good from that viewpoint. Let's go to daily. I call that nothing. Yeah. I've seen all I needed to see. No. EQR. For those of you that know, you know. For those of you that don't, you don't. Let's take a look. 1 month. No, guys, we're out of there. There's nothing to look at. I'm telling you, there's nothing to look at there. There might be here. I'm also going to go through this week's earnings and their positions today. I'll get that. Ooh, that's not good. This might be a great play down. Let's go to 1 hour. Yeah, I mean, too, baby. This is all up at this high price of 102. This might be a good short this week. Let's take a look. High price, high price. But see, as you can see, it's drying up because look, you have to remember something. If we're looking out a week or two and stuff like this, it's real difficult. We did find some. Oh, mama. They found. See, you would say this looks like supply. Now, I can tell you that this thing looks like it's going to pop 2% this week, but it does not look good. I would not want someone to follow me saying, "Hey, this should get a 2% pop this week," just to get annihilated moving forward because somebody is selling that big. On the short term, you have a buy opportunity, but that thing's getting sold. As I said, there's an occupancy issue, right? And with an occupancy issue, you're primarily investing in commercial REITs. You got a problem. A few of these REITs show it. Yeah. American Tower. I think I have scary news for you, my friend. You are not liked in the marketplace. Several of these are really, really not good. And I'm looking at daily charts, which means I'm looking out 18 months. Oh gosh. Yeah, no wonder yields are jacked up the way they are. Trying to draw in investors. This is another one that in the short term can get here at the low. I mean, odds are this thing's going back up to easily. Yeah, it's easily going to one. In fact, we'll mark this. But listen, you're not trying to buy this thing, everybody. Don't. AMT, you're going to what? 196. Target date of the 5th. Or no, the 28th. And today is the 23rd. All right, I think we're good there. All right, everybody, I'm good and sweaty because the sun is beating on me this morning. It is beautiful, though, man. Don't get me wrong. It's beautiful. Okay, so that is our reach for the day. That was definitely a split. I would say that was 50-50. Some looked pretty good. Some looked really bad. I hope that helped you. I am going to discuss our earnings this week later. So we have a bunch of companies giving earnings this week. My earnings forecast from 2 weeks ago is 100% accurate. I covered 6 positions. I think there's 8 to 10 this week. I'm going to do the same thing again. I'm going to tell you what the setup is for their earnings release. Remember that oftentimes earnings doesn't have a whole heck of a lot to do with the actual earnings themselves. It is primarily based on where cash flow is already been set up. That activity has already been established on where price will lead. So make sure you watch later today for the earnings for the coming week of it's the 4th of July on Thursday for the 4th of July week. I look forward to seeing you then. And remember, if you're not good up here, you're not good anywhere else. Take care of your mental health. Get out in the sun, sweat a little bit, do some exercise, smile. Sometimes you have to fake it till you make it. And a fake smile will produce a real one eventually. Right. So just keep looking up. Remember, you haven't failed yet. How do I know that? Because you're still here. So you haven't failed. All right. If you need someone to talk to and you don't have someone to talk to, reach out to me. There's my information. I will talk to anyone if they're having a problem that they feel they need help with and they don't have anybody to talk to. Every day above ground's a good day. I'll see you all later today.